Hey guys, welcome to Sammy FX. In today's video, we're going to be going about market structure. But first, please don't forget to subscribe to our channel, like, and also hit the notification bell because you'll be the first to know whenever I will drop a video here. Now let's dive right in. Now, what's market structure? Market structure is the pattern or way market moves. What I mean by the pattern or a way market moves, it means the market can either move in two ways. Now, the market can either be trending or be ranging. Now, what do we mean by a trending market? A trending market is a market that is going up, which is a bullish market, or going down, which is a downtrend market, which is a bearish market. Now, take for example, this market here is actually going up. It's actually going up. Now, a market that is going up is actually a bullish market, while a market that is coming down is actually a bearish market. Now, let's say the market that is going up is actually giving us a higher high. Sorry, let me adjust this. And a higher low. This now we can take it to be a higher high, and this is a higher low. Now, how do I mean? This is actually higher than this. This is actually lower than this. Now, what do I mean by that? A market that is going up is actually moving in an upward trend. While a market that is coming down is actually moving in a downward trend. Now, I'm going to be explaining that very soon. Now, let's take for example a trending market that is going up. Take for example this market. As you can see right here, the market is actually in an upward move. It started from here and it's going up. Now, it started from here and it's going up. Now, how do we spot a market that is going up? Now, the one thing that comes to everybody's mind is, how do we know a market that is about to go up? And how do we know a market that is about to come down? Now, I'll explain that. Now, a market that is about to go up actually gives us a break of structure. A break of structure before going up. Now, you may ask what a break of structure is. A break of structure is a market that shows that the market is about to change its movement. Now, but firstly, I will explain this. What I meant by a ranging market. This is a ranging market. A ranging market is actually a market that is giving us no direction, while a trending market is either moving up, bullish market, or moving down, which is a bearish market also. Now, if we look closely here, we see that this market started moving all the way from this zone, this zone here. Now, why did it start moving from here? Because there was a break of structure. Now, I'll show you the break of structure. Now, don't forget what I said. This was an ranging market. It was no direction. This was here. This was here. There was no particular movement. If this was higher than this, there was no particular movement. But something happened all of a sudden. There was a breakout. Now we can see there was a break of structure here. There was a break of structure here. Why? This market actually broke out of this zone. It broke out. Now, which means the structure has been broken. And what I said, when the structure is being broken, the market is about to move in an opposite direction. Now, this actually happened in the sense that it broke above it. It broke above this zone. Because after the market was ranging here, there was no particular direction. And it broke out. All of a sudden, it came down, and it started going up. Now, don't forget, the market was moving in a downward trend before. After the break of structure, you can see that the market started going up. Now, for every trader that trades, we only trade a trending market. We don't trade a ranging market. We don't trade the ranging market because in the ranging market, the risk is always high. There's no particular direction where you can gain profit from. So we always trade a trending market and not a ranging market. Now, after saying this is what I do. I'll look for an entry here around this zone. After the break of structure, I wait for the market to pull back before getting an entry trigger. Now, in case you don't understand what an entry trigger is it's actually an indication for traders to enter into a trade. It talks about the candlestick. In our subsequent videos, I'm going to be dropping a video about what candlesticks are. But first, you can actually go online and type trading with Rena, and I believe he has a video about that. Trading with Rena on candlesticks. You'll see a video about that. Now, this market actually moved up after giving us a break of structure, and it pulled back. Now, there's a lot of mistakes that traders make out there. Now, what they make is after seeing the breakout, they just enter immediately. After seeing a breakout like this, they just wait for a pullback, and without getting a good entry trigger, they just put the trigger here, right here. Sorry, right here, which is wrong. Is wrong. I always tell traders, please wait for the candle to come down and give you an entry trigger. Now, this right here is an entry trigger for you to get into the market. This is the right place to get into this market in this trade, because why? All of this has happened. Now, in case you're wondering, for those guys, I love using trend. Now, let me draw a trend line so we get to understand this better. Sorry. As you can see right here, the trend was broken. The trend line was broken, and there was a pullback, and actually gave us an entry trigger for us to buy up. Now, someone might be wondering again, what about the downtrend? What about the downtrend? Okay, I'll explain right here. Let me call it draw this. Now, this trend line was broken, and there was a break of structure here. This was a break of structure. This is a break of structure. Now, in case you're wondering, how do I get to pinpoint the exact place where the structure was broken? Now, it's very easy. Now, what I mean is, it's very easy is that if you can pinpoint a particular place where the last higher low was, don't forget, we say that market that is giving us a higher high and a higher low. Now, let me spot this higher high and higher low here for us from this zone. Here's a higher high. Here's a higher low. The same thing with here, higher high, higher low, higher high, higher low. Let's keep going up. Higher high, higher low, higher high, higher low. Now, let's look closely. You see, now this market here, sorry, this market here was the last candle that gave us the higher low. This one right here. So, and it was broken down. And like we said, wait for the pullback to happen. And this was the pullback. and the market sold. Let's go down and see it. So the last institutional candle that gave us the higher low, is our structural level. I repeat it again. Say the last institutional candle that gave us the higher low is our what? Structural level. Once that zone has been broken, we start expecting the market to what? Move in an opposite direction, because why? There's a break of structure. And as you can see, the market moved down. Actually went down, giving us a what? A lower high and a lower low. A lower high lower high, lower low, lower high, just like that, downwardly. Because why? The trend is moving down. Trend is moving down. Let me get this. The movement is down. Okay, that's that for market structure. And please don't forget to share to your friends about this video. Don't forget to like. Don't forget to subscribe to our channel. And in case you have any comments to say or a question about the market structure, you can drop your questions on the comment section down below, and I'll be right here to answer you. Okay, thanks fam. See you.